It's not 6:30 yet. Hello. Hey, Keith. Oh, yeah, yeah. Here I come. Okay.
Welcome, 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 welcome. Good evening. Happy, what is this day? Thursday? Happy Thursday evening. My name is Dan Rochon, and today I'm going to talk to you about how you can buy a home without a down payment, with no money down. So welcome to the presentation today. I'm going to tell you a little bit about what we're going to go over. And before I do so, I just want to say hello. I'm going to invite for everybody to please put your videos on, because then that way we can interact. This way that my style of teaching and interacting is really one that it's much better when we're having a conversation. Of course, I do have a structure to follow. And if you are possibly able to turn your videos on, I invite for you to do so, because you'll learn more throughout the presentation. So today you're going to learn how to buy a home with no money down, and you're going to know the steps of the entire transaction. So we're going to discuss personal finance, mortgage. We're going to discuss the role of the real estate agent, the home buying process, the role of the home inspector, the closing, and then life as a homeowner. This is about a 45-minute presentation, and then at the end of the 45 minutes, you will have an opportunity to ask questions. We'll do a little Q&A session, and before we get started, I just want to welcome everybody. Thank you for being here. Who'd like to say hello and tell us who you are and where are you living, and what are your intentions of buying in the future? And what's one thing that I can answer through this presentation? What would be something useful for you to know? Who'd like to share? Go ahead. Hello, Tina.
Hello, my name is Tina. I live in Arlington County, Northern Virginia, and I would love to own A condominium, something like that. But with housing prices, that's looking like a long-term goal. So I'd like to know how to make that reality
Okay.
sooner
So,
than what I think.
all right. So make it a reality.
Yes.
Fantastic. I was looking for a pen while you were speaking. Give me 1 second.
Okay.
I'm like writing with a magic marker here, basically.
Okay.
All right. So Tina, so you live in Arlington and you'd love to be able to figure out how to make home buying a home owning a reality.
Yes.
Welcome. Thank you for being here.
Thank
Who's
you.
next? What would you like to know today? Who are you and what would you love to know? Who has a concern about the home buying process? Who here has ever bought a home before? Okay, so some of you have, so it's like maybe 50%, and then the rest have not bought a home. Is that what I understand? All right, fantastic. Well, if you bought a home or if you not bought a home, either way, you're going to learn the process. Les, can we go ahead and share my screen? I'm not sure what we're looking at right now. So I'm going to go ahead and just jump right into it, if I may. My name is Dan Rochon, and I'm going to be your presenter today. I've been selling real estate since 2007 in Northern Virginia, Maryland, Washington, D.C. There's not a nook or a cranny that I do not know here in the area. I've been doing this for a very long period of time, and I've got, just tons of experience in being able to help home buyers like yourself. So I want to talk to you about first of all, now I'm wrong there, Les. Personal finances. And so with the personal finances, we're going to talk to you about developing a plan, a savings plan, and a managing your debt, and that will help us to, again, make this a reality. We're going to identify how to manage debt and, what are the community sources available to you. Les, if you could do me a favor and share with me the presenter's view, that would be helpful. So what are the pros and cons of owning a home? What's a pro? So go ahead and shout out to us. What do you see as a pro? Like, what's a benefit of being a homeowner? Who has an answer?
Generational wealth.
Generational wealth. God bless you, Tina. If you look at wealth in the United States and you look at the people who are wealthy, it is homeowners. If you look at the people who've owned a home over the last 5 years, particularly in Arlington County, where you're located, Tina, particularly in Northern Virginia, you're looking at a couple $100,000 of increased equity in just a very short period of time for many of those homeowners. That is real money. That is real wealth. What else is a pro of owning a home? Who knows?
Tax advantages.
Tax advantages. Thank you, sir. How about just the pride of owning, right? Just having the ability to know, like, I am a homeowner. How would that make you feel? How would that make you, feel that you could now leave a legacy to the next generation? We're talking about that generational wealth. Tax investment. The stable cost. If you get a home loan today, and if you get a fixed loan, we're going to talk more about this in mortgages. That fixed loan today, let's say your payment is, call it $2,300 a month. 15 years from now, a fixed loan, guess what your payment's going to be? About $2,300 a month. The principal and interest will remain the same. The only things that may change in that would be your taxes, your insurance, and if you're in an HOA or a condominium, potentially the HOA or the condominium fees. But it's going to be really, really close to that same payment. Now, here's where that's important. $2,300 today, think 15 years ago. Was that a lot of money? A little bit of money? More money? It was more money 15 years ago. So what that means is that you're going to lock in that payment today, assuming that you get a fixed loan, and that payment's going to stay the same throughout the duration of the loan. We'll talk more about that when we get to the mortgage part. What are the cons? What are the disadvantages of being a homeowner? Has anybody ever been a tenant and have something break in the house? like a hot water heater or HVAC. Has that ever happened to you? If that has happened to you, who is going to fix it? If you're a renter.
Not me.
Not it. Not it. The landlord is. Now, hopefully you have a great landlord, right? That goes back to the pros and cons, because if you don't have a great landlord, then you're chasing he or she down, begging them to do their job of fixing the property. Assuming that you have a good landlord, they're going to pay for it. And that's, a disadvantage to owning the home is that you're going to be responsible for the repairs of anything that breaks. Now, guess what? We could protect you in that case by getting you basically it's an insurance policy. It's called a home warranty. And so we can protect you if you're at the end cycle of the end age of some of the appliances, for example. Say your HVAC, or let's say your hot water heater has a 15-year life expectancy and it's 14 years in when you buy the home, but it's perfectly fine. Then you may consider getting what's called a home warranty, which will then insure that specific piece of equipment. That can allow for you to be able to mitigate your costs so that you're protected to not have unexpected repairs. So let's talk about the, dealing with your personal financing, right? And so we're talking about your personal financing. Part of buying a home that you're going to need to prepare yourself for is to have good credit. Typically, we're looking at about 620 as a credit score. If you don't have that, if your credit is less than that, we'll talk about that here in just a few minutes. But what we want to do is when we go through the credit reporting, we want to understand who are the credit reporting agencies. We want to understand the credit report, the credit scoring. We want to know how to improve the credit and, how to safeguard your personal information, because, of course, that is important to you. So the credit scores are graded by these three different companies, Experian, Equifax, and TransUnion. They range from a score of 300 to 850. Like 850, boom, perfect. Your score is going to impact. It's going to be one of the few things that's going to impact your ability to buy. So when you buy, the lender can only look at what is your ability to buy and what is the value of the property. So how much can you afford and how much is the value of the property? That's it. They cannot look at any other criteria. So when they look at those two criteria, how do they figure out how much you can afford to pay? It's going to be two factors to that. Number one is what's called your debt to income ratio. Number two is what's called your credit score. Your credit score, as I mentioned, they're going to be looking at about a 620 or greater is what they're aiming for. If it's hovering around those, below 600, but you're, below 620, but you're above 580, there are some programs that we can get you in, but we'll talk more about that here in a few minutes. Your debt to income ratio. What the debt to income ratio is how much debt do you have that's a fixed debt versus how much is your income, including the mortgage payment. So let's say your debt is $38 every single month and your income is $100 every single month. Of course, those aren't real numbers, but they're easy numbers to do math with. If that was the case, then what your debt to income ratio would be, it would be a 38% debt to income ratio. And that just happens to be the DTI, debt to income ratio, that the lenders look for. So understanding the credit report. So when lenders see multiple applications on a credit report, oftentimes what I get asked is, can I shop around for different lenders? And would that impact my credit? The answer is yes, you can shop around for different lenders. The answer is it will not impact your credit except for a few points. You could go to 3 different lenders, 5 different lenders, as long as it's within a 45-day period. And they're going to see that as one inquiry because it's one thing that you're applying to. Now, if you're applying to get a new car or to finance some furniture or a new credit card, you want to avoid doing that during the time period that you are buying a home. You want to avoid opening new credit cards, avoid closing the credit cards as well, because you have a certain line of because that impacts your credit score. You want to avoid applying for new loans. You want to avoid co-signing for a loan. You don't have to, again, worry about shopping for a mortgage, because if you apply for the mortgage loan with several different lenders in a short period of time, as I've already mentioned, it's only going to impact you one time. The different things that impact your credit score. These are the things that are going to impact your credit score. It's going to be the how long have you had a credit history for? Obviously, only time can help us with that. It's going to be how much of new credit have you recently obtained? It's going to be what is the mix of the credit, meaning is it all secure credit? Is it revolving credit? Is it a credit card? Is it a loan payment for a car? And then your payment history, that's a big chunk of it, 35%. Have you been on time making your payments? And then how much do you owe to creditors is about 30% of the of your scoring. So when you're looking at ways to be able to improve your credit score, here's the news for you. There are some ways that we can improve it, but ultimately it's going to take time. The ways to improve your credit score include paying your bills on time, keeping your credit card balances low, so no more than 50% of the available credit, paying down your balances on your credit cards, get below that 50%. Don't apply for new credit, particularly when you're considering to buy a home, and always be choosy about the credit that you do apply for. So you only use your credit card when it's absolutely necessary. Do not co-sign for any financial obligations for a family, for a friend, even if they're your best friend. And then regularly review your credit report for errors. If there are errors, you could challenge those errors, and there often are errors, right? So that's something that you absolutely want to make sure that you are paying attention to. So as we mentioned, the components to buying a home, number one is what can you afford? Number two is what's the value of the home? So what you can afford is based off of what your debt to income ratio. I think I said 38% earlier. It's 36%. I misspoke. Is what they're looking for as a low number. They can go up to 48%. Okay, so if it's higher than that 36%, the higher the number, then the less favorable you are. But there are lenders that will go up to 48%, but 36% is really what they're looking for. And to remind you what that is, and so that I'm not wonking on you, it's if you make $100 and it's $36 that you have to pay in bills every month, that's a 36% debt to income ratio. And that can range from the 36 to the 48. But if it gets above the 48, it's going to be really, really hard for you to be able to get a loan. If that's the case, then you're going to have to pay that downward. But ultimately, your first step is going to be to talk to a lender. So when you're talking to a lender, how are some of the ways, like, let me ask you guys, shout out, how can you find a lender? What are some ways that you can choose a lender? Type in or shout out. What's a way you can find a lender? Tina?
Online.
Through you.
Through me. My girl! Somebody give her a gold star, please. Somebody Tina, I'm going to drive to Arlington tonight with a ham sandwich. That's your prize. My goodness gracious. Yes, indeedy. Cullen, what did I hear you say?
I didn't. I think Jeff shouted out, but where do you bank at?
Where you bank at? All right, you get a packet of mustard. Tina gets the ham sandwich and you get the mustard. I like Tina's answer better, but they are both valid answers. Okay. Now, why do you want to trust your real estate agent when you are applying for that loan? What's important to you that the real estate agent has a relationship with that lender?
Well, that's what I was going to say, that relationship, that commonality, that they're already partnering with each other.
Yeah. Two big reasons. Number one, here's the thing. You may not believe this, and it's perfectly normal that most consumers don't, and that's okay. Oftentimes in a real estate transaction, there are problems. When there's a problem, things need to get fixed. It's a lot easier to get fixed when there's a relationship already established, because guess what happens to that lender if they don't treat my clients like gold? They don't hear from me ever again. Okay, so you can leverage through your agent to make certain that your lender is jumping through hoops to make sure that you have the best price, the best terms, and the best rates in your loan. And if something goes wrong on a Sunday night, they're going to answer my telephone call. You go to Rocket Loans, guess what happens at Sunday night if things are falling apart? We're not getting in touch with them, certainly on the weekends, and probably not even on the weekdays. Who's who in the process? We're going to talk more about that here in a second, and we're going to talk more about your mortgage documents, what makes up the mortgage payment, and preparing for closing. So we're going to go through some of those things. So before we talk about that, I want to let you know, what is the difference between a pre-qualification and a pre-approval? And which of those do you want to get? The pre-approval is a negotiating tool, and it is essentially that they are going to take a look at your document. So when you apply for the loan, the lender's going to ask you, Rhonda, I'm going to ask to see your pay stubs. I'm going to ask to see your tax returns. I'm going to ask to see your verification of employment. So those are some of the things that the lender's going to ask for. Once they get those documents and they actually look at them, then they'll be able to approve you for a loan. So now it's as good as cash that they say, okay, she's good for this loan. You're good for this loan. And that's what you want from your lender. There's different types of there's different, roles within the lending department. So there's the loan originator, that's also the lender. That's who you would be speaking with. And then behind the scenes, there's going to be a loan processor and an underwriter. You may communicate with the loan processor, and you probably will never talk to the underwriter. So if you consider it, I'm going to use my board behind me, and let me push this up just a little bit so you guys can see me. I'm going to walk through the home buying process on my little whiteboard here. And I'm going to put in here the people and who's who so that you can understand. All right, so here is a broker, a real estate broker. Here is a real estate agent. And here is you, the buyer. All right, I think I got you right on that. Is that about right? Rhonda, you got a smile on your face. Come on. I put the smile on there. Come on. Okay. So these are the different roles in the transaction. Okay. And now you're going to have over here, you're going to have a lender. And then we're going to just talk about the lender right now. So you got the lender, and then the lender's going to have a processor, and then there's going to be an underwriter. So we'll talk more about these people here in just a few minutes, and we'll. What you're going to do is you're going to go and you're going to talk to an agent. That agent, when you talk to them, they should be asking you adept questions. They should be actively listening to you. They should intend to gain rapport with you so that you're connected and that they're actually listening to you. Because it's vital that that agent that you hire understands exactly what your intentions are. Because if I understand that, Tina, that you want to make this a reality and that you're afraid of the home prices in Northern Virginia, and you want us to come with a plan to say, okay, I'm willing to persist, even if it means 18 months from now, 6 months from now, whatever the case may be, as long as I have a plan. Then if I understand that, then I can help you devise that plan. Once we speak, one of the first introductions I'm going to make to you is going to be that lender. So I'm going to introduce you to the lender. That lender is going to bring you down an application process. The application process is that you're going to provide them with your name, your income, your social security number, so that they can provide you, they can get your credit report, the property address, an estimated value of the property, and the mortgage loan amount that you're seeking. Now, the property address and the amount, the estimated value of the property, they may not have that early on in the process. They probably will not. Once you apply, then you're going to be able to get an estimate of how much the loan's going to cost. The lender at that point is going to give you an estimate, and they're going to let you know how much the points are. I'll talk more about that here in a second. The appraisal, the title search, the survey, recordation fees, all the different fees, attorney fees, origination fees, etc. They're going to let you know up front what those loan estimates are. So going into the loan, you're going to know what is the, what are the costs going to be. Then 3 days before you go to closing, you're going to review those again. I'll talk to you about that when we get a little bit further down the process here. So you're going to apply for the loan. Now, once you apply for the loan, your agent is going to consult you, ask you those in-depth questions, and you're going to hire the agent. Now, in reality, you're actually hiring the agent's broker, and the agent's acting on behalf of a broker. Now, to think about this in a way that maybe you can relate to, who here works at a job? Anybody? Okay, Rhonda, would you be willing to share with me where you work?
I'm a special education teacher in DC, public school.
Public or private?
Public.
Public. Okay, let's say you work for a private school, because the example will work better. So if Rhonda worked for a private school, and let's say Constance wanted to bring her daughter to the private school, and Rhonda is the teacher. So Rhonda's the one that's going to be interacting with Constance and going to be the face of the company. But Constance is not necessarily hiring Rhonda. Constance is hiring the school, and then the school employs Rhonda. Okay, so you guys all get those relationships there? All right, so real estate's just like that. It's no different than that at all. So even though you're not necessarily hiring the agent directly, you're hiring the school, or in this case, the broker, and then the agent acts on behalf of the school or the broker as your fiduciary. Okay, so real quick, what a fiduciary and who a fiduciary is that they look out for you and your interest in front of all others, including their own. And that's the obligation and the responsibilities of a fiduciary. Now, you go and you hire the agent. Once you hire that agent has what's called a fiduciary care for you. So what that means is that everything that you share with them about your financing, about your obligations, your intentions remains confidential with them. They're going to remain loyal to you from now until, the end of the transaction, meaning that they put your interests in front of all others. They're going to make sure that they go through all the disclosures so that you understand everything that needs to be disclosed to you, such as lead-based paint, such as latent defects and material facts. A latent defect is something that's not easily seen. So what that means is if there's a crack in the foundation and there's carpet over top of it, then the seller in Virginia has the obligation to disclose that to you. What a material fact means is that if it's something that you have a reasonable, a reasonableness to know, then the seller has to disclose that to you as well. Once you hire me, these are some of the things that I provide to you. In addition, I also provide you to take care of the accounting. So making sure that any of the money, and we'll talk more about the money here in a few minutes, is accounted for. I make certain that I provide you with reasonable care and due diligence. And then also I treat you fairly and honestly. Okay, so those are the responsibilities that happens when you hire the agent. So the agent introduces you to the lender. The lender has a team of people who he or she works with, and then you get the process started. So once the lender gets you set up for the loan, then you begin the process to buy a home. So what would cause you? What are the reasons that you would want to hire a real estate agent? What are some of those reasons? Like, why would you even want to hire the agent? Let me map it out for you. So you're going to be looking for some homes for sale, right? And over on the listing side, there's going to be some representation. And so this would be the seller. Can you see that? Am I down too far? All right, all right, thank you. The seller, the agent, and the broker. And on this side of the transaction, it's going to look a lot like that side of the transaction where the seller is going to hire the broker and then the agent's going to act on behalf of the broker. When that happens, this broker is going to offer some compensation. So the seller is going to, let's say, offer, call it 6% compensation. Okay, so what that means is if you sell my house, I will pay you 6% of the total of the sale. Now, typically, what they would also agree to in this agreement right here, so there's an agreement between the seller and the broker, they're going to agree to say, we're also going to, in most cases, agree to pay anybody who represents a buyer, that's you, a certain amount of this compensation. So let's call that 3%. So this broker is agreeing with this seller to pay, in this instance, call it 3%. And this broker is agreeing with this agent to pay them part of that compensation. So that's oftentimes how an agent gets paid. What does this matter to you? This matters to you because what buyers end up doing is thinking, well, I'm going to save myself some money and I'm going to go to an open house and I'm going to talk to the listing agent and I'm going to ask that listing agent, hey, will you take care of me? And they end up doing that. But guess what? Because the buyer, you, thinks you're going to be making money or saving money. But that's not the case. Because in most cases, what happens when that occurs? Well, here's what happens when that occurs. Remember this 3% over here? That 3% stays in the pocket of the listing agent and the listing broker. It doesn't go to you. So you don't save any money at all by not getting an agent in most cases. You get the representation. So some of the ways that an agent will help you includes the representation of your interests, includes the knowledge of the market, the nooks and the crannies, understanding, if you hire an experienced agent like me, understanding which of the roads that, let's say if you're in this community, I helped a buyer not too long ago who was in a community, worked in DC, and had to take a left into on the Braddock Road and wasn't able to take that left without having to go, right, because of the way that the traffic flows. Now, if they go by that property, that home at 3 o'clock in the afternoon, they're not going to realize the way that the traffic is jammed up in that artery of road. But an experienced agent could be able to tell you, hey, look, Tina, check it out. This road, just so you know, it's jammed up here in the morning. And if you're trying to get that way, it's going to add another 10 minutes to your commute. Now, that may seem like an insignificant thing, but hey, if you have to add that to your commute every single day, I would want to know. I mean, would you want to know something like that? Certainly, right? So those are some of the nuances that they can help you with. They can also help you to negotiate. So they're going to help you to negotiate with the seller. So we'll talk about that here in a few minutes. They can also help you to make sure that you stay out of trouble by going through all the proper legal paperwork, by going through all the disclosures, by making certain that everything is proper so that you are protected. They're going to also make sure that the title company is doing their job. So we'll talk more about what the title company does here in just a few minutes. They're going to make certain that when you're looking at homes, it's not just like what a lot of consumers think is what an agent does is just help you find that home. Well, let me be real with you. When I first started in real estate sales, that was a true statement. Not that that was the only thing that we did. But today, you've got the same data as I have. But the difference, I mean, you open up Zillow, it's right there. But here's the difference. The difference is I know how to interpret the data. I know how to be able to communicate to you what's happened in the marketplace over the last 3 years and how that's going to impact you today. So let me give you just a little synopsis of what that looks like. So over the last 3 years, when we go back to the pandemic, the beginning of the pandemic, the market was high. And then what happened was for 3 months, there was nothing happening in the marketplace. So that was March, April, and May of 2020. June of 2020, what happened was the market spiked up. The market spiked up because people from the inner city wanted to move out. People in condominiums wanted to say, hey, I need some space. Wanted a bigger townhome, wanted a single family home if possible. And so what happened was the people living in the single family homes, they didn't want to leave. So you had this shortage of demand. So that happened June of 2020, and you enter into the winter of 2020, things start to stall. Going into 2021. Now you enter in 2021, prices have spiked, they leveled off. 2021, prices spiked again. What caused that to happen? What caused that to happen was the fact that all the stimulus packages of the government during the pandemic were now starting to impact the economy, which drove inflation up. So inflation spiked the prices up again. The government says, let's control that. So they raised the federal interest rate. And that's the overnight rate of the way that banks loan money to take a loan from the federal government. At the end of the day, when your bank closes shop, they've got to have a certain amount of money in that bank account based off of how much money they have loaned. If they don't have enough money, they have to borrow it from the Federal Reserve on what's called an overnight rate. So the government can impact the economy by manipulating those overnight rates. And then that gets passed on to you, the consumer. Today, the interest rates have gone up from around 2.2%, 2.3%, almost 2 years ago, to about 7% today. Now, should that scare you? Not at all. Because where we're at right now is we're at level rates, and we're still below the average of the last 40 years. The average interest rate over the last 40 years is 8.6%, and we're at 7%. And it seems as though if they're going to hover around that 7%, between that 6 and 7% mark, moving forward. I hope, and we'll see. But they seem relatively stable. That's good news to you. So these are some of the things that an agent can do, just like what I just did, is explain to you the macroeconomy, but I can also explain to you the microeconomy, what's going on in that local marketplace. So these are some of the ways that the agent's going to be able to help you. How can you choose an agent? Different ways that you could choose an agent include going online. You could Google somebody. And oh, by the way, no matter how you get introduced to an agent, you should Google them. I invite for you to Google me. Check out my reviews. No matter how you meet that agent, make sure you review them. If that agent's a best friend, a cousin, a sister, it may be a little bit uncomfortable to have the conversation with them to say, hey, look, I'm going to go with a professional. Now, guess what? If that's me and I'm the professional, I can make sure that I pay your sister. I'll pay her a referral fee. That's a win-win. There's ways that we can make that best friend feel good, and you get the experience of somebody who has the know-how. And I'm not speaking derogatory about anybody who you know personally, yet you don't owe anything to that person that you know personally. You don't owe anything to that person in your church who is a real estate agent who's done one transaction in their life. You don't owe anything to any other agent who you meet. Ultimately, you owe yourself to make sure that you're getting the very best person that's going to care for you, that's going to be able to have your back. So these are some of the ways that you could choose a real estate agent. I mentioned to you how the real estate agent already gets paid. I want to talk to you about the experience of what to expect once you start the process. So you have that conversation with the agent. The agent digs deep into your motivation, digs deep into your goals, digs deep into what is it that you're looking for in a home? What is it that you want in a home? What are your needs in a home? Where do you work? Do you plan on changing anything anytime in the future? Now they can't ask you about your family because that's against the law, but they can ask you, what are your future plans? You may want to offer that to them if you're thinking about starting a family, if you're thinking about downsizing a family, right? And maybe you're going to get divorced. God bless you. I'm sorry. I shouldn't joke about divorce. That's a bad joke. Sorry. I'm sorry. But if you're thinking about any changes in your personal life, you may want to, offer that to them because they can't ask you. Okay. So the agent is going to, interview you. You're going to interview them, but you should be listening to what type of questions are they asking me? Are they really genuinely caring about what I'm looking for? Now, once I understand what you're looking for, then we can start the process. And when we start that process, we'll be able to hit that bullseye. We'll be able to hit that bullseye because I'm in the marketplace every single day. Like I have done this since 2007. I help around 100 families every single year buy a home, sell a home, or invest in real estate. And because I've done that, because I have the market knowledge, once I understand what you're seeking, if it exists, we're going to hit that bullseye. Now, if it doesn't exist, then we're going to have to either change the price, or maybe the location, or maybe the type of a home. So maybe instead of a townhome, we have to look at a condominium. Or maybe instead of a 4-bedroom, it's a 3-bedroom. Or maybe instead of 400, it's got to be 450. Or maybe instead of Arlington, it's got to be Burke or Annandale or Centerville. Okay, so it's going to be one of those 3 things that we're going to have to change if that home does not exist. But what I can promise you is if it exists, I'll find it. An experienced agent will find it for you. And if it doesn't exist, we'll have to change one of those 3 things, and then we'll find it. So you hire the agent, you go out and you start looking at homes. So we start searching. So now that I understand exactly what you're looking for, and I'm going to make some recommendations, and we're going to look at these together. And I'm going to ask you, did I understand exactly what you're looking for? Do I understand what you're looking for? And now we're looking at some different homes. At one point, we're going to find that home that's ideal for you. When we find that home that's ideal for you, we're going to do what's called an offer. That offer is going to go, your agent, that's what I would advise you on, of how to write that offer. And then as we write that offer that will get accepted, we're going to make that offer to the other agent, the agent between the agent. When that occurs, then at this point, the other party has 3 options. They can either accept the offer, they can reject the offer, or they can counter the offer. And essentially, what a counter offer is rejecting the offer and making a new offer. That's essentially what the counter offer is. Okay, so those are the 3 things that can happen when we make the offer here. So when we make that offer, at some point, let's say they make you a counter offer. So let's say they say 30 days from now, we'll just say March 23rd, 2023 is the offer that we're going to close on that date, and it's going to be for, let's call it $430,000. That's my offer. If this seller over here changes anything about that offer whatsoever, even if it's the day, they say, I'm traveling on the 23rd, I want to close on the 24th. And if it comes back in writing, then essentially what they've done is they've rejected your offer, and it's a new offer from the seller to you. Now you have the choice to accept, reject, or counter offer. And again, a counter offer is essentially a rejection with a new offer. At some point, we're going to agree to the price and agree to the terms. Congratulations. What that means is that now you're what's called ratified. Okay, so now the contract is ratified, meaning that the price and the terms are agreed to. When the price and the terms are agreed to, then often there's going to be some contingencies in there. Before I talked about the contingency, I skipped over a part here. When you're making that offer, you're going to put into an escrow account what's called an earnest money deposit. Let's call it $5,000. It could be less. I'm just picking a number. The number where it should be is whatever you can afford that you're comfortable to. The reason why this is important is because that's going to allow for the seller to know that you're serious. That's going to allow for the seller to know that, okay, you're in the game. This money, the earnest money deposit gets removed from that account either when the contract is fulfilled or when each party says we agree that it goes away, or on a court order. Those are the only three ways that it gets removed from that earnest money deposit. And all the years that I've been doing this, I've had 2 times we had to go to the judge to get an earnest money deposit. And in both times it was because one was a stroke and the other was a death. No times has it ever been because of a dispute. Okay. In both times it was amiable, but legally we couldn't release the money. So what that means is when you get a good agent, we're going to protect you so that you don't have to worry about what's going to happen with that earnest money deposit if things don't go the way you want them to go. Okay. So as long as you go to the terms of the contract, when you get to closing, that money will be released back to you, or it will go into a part of the closing. So when you get the contract ratified, it's going to typically be contingent, most likely on 3 things. That's the home inspection, the appraisal, and the financing. And so the financing and the home appraisal typically is going to be around 21 days from the time that you write the offer, and the home inspection is going to be 3 to 5 days. Now I want you to think about this for a second. I have never met a home inspector not give you 100 things that's wrong with a property. Never. And I want you to think, what are you going to emotionally be feeling the day after you write that offer that gets accepted? Do you think you may be a little anxious? You think you may be a little bit on edge, a little bit like, man, is this the right thing to do? Okay. So if you think about that, within 3 to 5 days, there's a home inspection. And now at that point, goodness, here's 100 things wrong with the property. Happens 100% of the time. That may scare you a bit. Would you think? So what we want to prepare you for is that will happen. Yet when it does happen, understand that what we want to look out is the things that are going to cost you money, the big rocks. And those are the things that we're going to ask for the seller to repair. The things that are insignificant or cost little money, we're not going to worry about those. Okay. Or, I mean, it's up to you. My job is to represent you. I will do whatever you ask me to do. But my recommendation is to not let a $35 smoke detector blow up a deal because of emotion. Because right now you're scared because there's 100 different things, but it's all small stuff. Does that make sense to everybody? You guys all follow me on that? Yes. How you doing? I know I'm going a little bit over time. It's 7. I told you I'd be done in 45 minutes and then do Q&A. Either way, we're done at 7:30. Just so you guys all know, I'm not going to keep you a second past 7:30. Okay, so give me 14 minutes of energy, and I'm going to give you 14 minutes of freaking content. You guys good with that? Is that an exchange that's worth it? And if I don't give you value, you get your money back for your registration for this class. I'll even multiply it by 10. Your money back times 10. That's a freaking deal right there. Come on. All right. So these are the things right here: home inspection, appraisal, financing. If you go to the home inspection, you don't like the home, guess what? The contract goes back to the way it originally was. Okay, meaning you get your money deposit and we're done. The other things to notate is that there's going to be some things that if it's a HOA, a homeowners association, or a condominium, and you're going to have a right of rescission. In Virginia, it's a 5-day right of rescission. That means that if within 5 days after you receive the resale disclosure, that's the disclosure that the condominium or the HOA is going to provide to you, that you have 5 days to say, I'm out, and you don't need a reason. 5 days, I'm out, you don't need a reason. Okay. So an HOA is a common community that's managed by an association. A condominium is a type of home, I screwed that up. A condominium is a type of ownership, not a type of home. Okay. What most people think is a condo as like a certain type of property. That's not accurate. It's a type of ownership. What that means is inside the 4 walls in a condominium ownership, you own that 100%. Fee simple. Outside the walls, you own that in partnership with the other owners of the condominium. What are the terms of that? The terms of that are going to be addressed in the condominium disclosures, the resale packet. And when you receive that resale packet, you've got 5 days to say, I'm out. No, and you don't need a reason whatsoever. Okay. So those are the different things that are going to keep you locked into this. Let's move into the home inspection real quick. I want to show you a quick video from one of our home inspectors, Kyle. It'll be a 3-minute video.
My name's Kyle Mullane, and I'm with KM Navy Home Inspection, and we do home inspections. We also do radon inspections and termite inspections. At the beginning of a real estate transaction process, you've already met your realtor, you've met your loan officer. The third most important person is your home inspector. The home inspection happens within 3 to 7 days of that contract being signed. It is very, very important to get a home inspector into your home in that time period. If you don't do it, the contingency just goes away, and you will never have a record of what that house looked like at that specific time period. Talk to your realtor and say, I need this home inspection, let's go get it done within 2 to 3 days. So talk to your realtor about a trusted home inspector. It's very important. They trust the home inspector, that they'll do a good job, they'll get the report back on time so that they can negotiate. And so that's very important to have someone that you trust, the realtor, and also what the realtor trusts in that home inspector, which means that you can trust them to do your report and do your home inspection professionally, cleanly, and quickly. During this home inspection process, at the beginning, the home inspector should take you somewhere into the home and explain to you what they're going to be looking for. What I do with my clients is I take them into the kitchen, I talk to them about what I'm going to do, what I'm really going to be looking at, and what I'm really, really, really going to be detailed about. There are 5 main things. Okay, the first one being your foundation, the second one being your roof, the third one being your electrical system, fourth being your plumbing system, and fifth being your HVAC system. So the home inspector should at least go over those 5 major items, and then obviously looking for paint and chips on the wall, things like that. They'll take pictures of it, and then they'll put that in the report later. During the inspection, the home inspector should take you around, tell you what's going on, tell you what he or she has been finding, and just kind of generally talk to you about how they are not feeling about the house, but what they're seeing in the house. Okay, it's not a feeling, it's just about facts, what the house is giving back to the home inspector. And then when the inspector is done, they should take the client somewhere, wherever, kitchen, living room, wherever's comfortable, sit down, talk with them about the house for 5 to 10 minutes. If there's any questions, that's the perfect time for the client to ask any questions. So at the end, when the home inspector, everybody leaves the house, the home inspector will go back to his office and start the report. The report usually takes about 1 day to 2 days to really generate a good report, and then get it back to your realtor so they can do some negotiations. That's kind of what a home inspection is. Congratulations if you're even thinking about buying a home, and double congratulations if you've already put a contract in place, and we'll see you at the next home inspection. Thanks. Bye.
All right. Thank you, Kyle. So that is the home inspector explaining to us what the home inspection is. Now we go back over here. All these contingencies are removed. We go to closing. Congratulations. You should be proud of yourself. At closing, there may need to be some money transferred. If the money's going to be transferred, it's going to be a wire transfer. I'll tell you in just about 2 minutes how you can do this with no money down, because that's the promise of the class, by the way. So you're going to make sure that you have your identification. You're going to want to make certain that you know where the office is. It's going to be about an hour or so for you to sign a whole bunch of documents. Those documents include all the loan documents, and it's going to take you a second so make sure you're scheduling an afternoon or so. You'll get your keys at closing. You'll make sure you get in the remote controls to the to the garage doors, and any warranties, any manuals that they have for the appliances, any warranties that are transferring. I will help you with all of that, so you don't have to worry about that. The day of, or the morning of the closing day, we're going to do a walkthrough. I'm sort of backtracking here. We're going to do a walkthrough. We're going to make sure that the home is in the condition that you expect it to be when you bought it. 3 days before closing, we're going to go through what's called a closing disclosure. Remember at the beginning of the class, I said to you that the lender is going to give you all the estimates. And those estimates, 3 days before closing, are going to be shared with you a second time to validate and verify that the numbers are the same as what was told to you up in the front of the process. Once you become that new homeowner, when you work with an agent like me, then I'll introduce you to an entire team of people that you would need to be able to do any home maintenance, to do any home improvements. But not just that, because I have so many business connections with great people like Kyle, I've got business connections with the local chiropractor, the attorney, the banker, whatever it is that you need, I've got those connections. And I'd be happy to introduce them to you. And these are 15 years of collected, well-vetted resources that when somebody becomes a part of my team, and I'm talking to you, you know, anything that you need whatsoever about the home or not about the home, I've got somebody for you, and we can be able to introduce them to you. So what questions do you guys have? How to get it with no money. There's some programs in Virginia, the Virginia Housing program, which has a grant program. You do have to take a class to be able to do that. The class, I teach the class, it's an 8-hour class rather than a 1-hour class. Very similar to this, but it's more fun because it's 8 hours. So we have to we go up there and we blow out fire, we juggle, we dance, we do all that type of stuff for real. If you want, come into the class, you'll see. Jeff York, he's going to be dancing. It's going to be great. He's going to put his chaps on. Oh my goodness gracious. I can't wait. And so, Virginia Housing does have that grant program. They will allow for you to come in with no money down. We can also get the seller to pay your closing cost. And so while we get the seller to pay your closing costs as a part of the negotiation, then you can literally come into that transaction with no money. If you're a veteran, then you could get a veteran's loan, same type of deal. So there are options depending on your scenario, depending on your situation, where you get into this property. As long as you can afford it, we can make it happen. The best way to be able to understand what those options are specifically to you is to book a call with me, and my phone number will be on this next slide. And I'd be happy to have a confidential conversation. We can go through and we can understand exactly what your needs are, and I can guide you through that. What questions do you guys have, and what ahas do you have from today's presentation? What did you learn today? Who learned something?
Well, I like what you said about have a plan, because reality is it's a plan. It may not happen for me right now, but at least I have a plan in place. So that was encouraging.
Tina, if you want, we can have a conversation, tomorrow or Monday, and we can go through and we can look at your scenario. I'd be happy to devise a plan for you, help you devise a plan.
Okay. Now, a question I did have is, what if the seller agrees to repair the items and they do it some cheap way that's not in your best? Who checks on that? That's after the inspection.
Yeah, typically what I do at the inspection is, instead of asking for repairs, I'm going to ask for money, because that's better in your interest. And so we're going to, let's say there's an HVAC and it needs to be repaired. So we'll get an HVAC inspector out there, give us some estimates, and we know, okay, $7,500. So then I would negotiate for the $7,500 instead of getting them to repair it. That way it's in our control. Great question. What other questions do you guys have? What ahas do you have? All right. Well, I promise you I'd be done by 7:30. It's 7:27. So, we get 3 minutes left. I just want to take just a portion of that 3 minute to congratulate you, to thank you for being here tonight. And if I can be a resource for you, please let me know. I'd be pleased to be able to help guide you through this process. And even if it's just to answer some questions, right? So maybe you're shy, you don't want to ask a question publicly right now. I get it. No problem at all. Or maybe you want to start the process and just say, what's viable for me? What can I do? What are the steps specifically? Like, what's the next step? The next step, just so you know, is I would introduce you to a lender. Together, we would have a conversation with he or she, and then we would understand, okay, here's what you could do today. What do you want to do? Well, then what's the plan to be able to get from here to there? Or maybe you're ready to rock and roll today, depending on your scenario. But I promise you, if there could be a solution, I can find it for you. I promise you.
I do have a question if no one else has one. What does a person look like who has an 850 score? Like, what is that person's, how are they getting that?
Go ahead, Jeff.
You see me? Not like this.
They've had credit for a long period of time. They've always paid their bills on time. Their debt to income is very, very low, and they have credit available to them. Okay, so so you got $100,000 of credit available to them, or even if it doesn't even have to be high like that. Let's call it 35,000. Okay, and then of that 35, they have 10,000 that they take out like on a monthly basis, and then they pay it all back. Right, so maybe they're paying their bills on their credit card to get points, and they're paying it all back, and they do that through time with no delinquencies. That would be an example, but it takes a long time. Here's the thing. There's no difference between 800 and 850, right? Like, you're not going to get a better deal, right? So, you know, as long as you got, you know, decent credit, you'll be able to get a loan. Good question, Tina. Thank you. All right. Any final questions?
Happy belated birthday.
Hey, she gets 2 ham sandwiches. And Cullen, I'm taking your mustard away. He gets the mustard. God bless you guys. Please stay in touch. Please let me know how I can be a resource for you. See ya.